Hi all, this is Ashish Kyal here, and welcome again to the Elliott Wave News channel, an initiative by Wave Strategy Advisors. And today we are going to discuss again about the current state of market, how overall equity markets have been looking, and what has been happening. In the previous update, if you remember, we discussed that the volatility should dry down, and it has increased drastically. And exactly as that expected, markets continue to move lower in the form of wave B, but at the same time, the volatility over past 3 days have constantly reduced. So also one important thing that we discussed in the last update was that the option buyers are going to probably lose money because as and when the volatility starts coming down, the option value will deteriorate. This is exactly what has happened, and even whether you are long on the call option, then the value has drastically gone down, and over past 2 days, even the put option has been deteriorating. So, what is the current scenario? We discussed that Bollinger Bands should work well in the previous video update, and we can clearly see that there is a sharp contraction. So, if you can let me share the screen, or if you can see the screen, you can see that there is a sharp contraction between the upper and the lower blue line, which is nothing but the Bollinger Bands on an hourly chart. This clearly shows that there is a sharp contraction there, which means that volatility is reducing now. And this is how it moves. So there is a sharp increase between the bands, the upper and the lower one, which you can see here. And then now there is a contraction. So an expansion and a contraction is a typical property and is also cyclical. And we can see here that there is a contraction, and now we can start expecting some kind of consolidation, or we are already seeing some consolidation over past few days. The movement on the downside looks like a wedge pattern over here, but as of now, there is no price confirmation. So there is no positive price confirmation. One of the basic and the best technique in order to identify if there is a reversal is to expect and see a close above the previous day high. A close above the previous day high is going to be the first and the foremost easiest step to understand that the downside pressure is reduced. Unless that happens, I think the markets can continue to drift. It might go up back towards 8124, 8150, again drift towards 8050 levels, or probably break the low, because a wedge is a typical pattern where the lows are broken, but there is no momentum which picks up. Also, during such times, trading intraday or positional becomes extremely challenging, because what has happened over past few days, the stocks that have been a top gainer during the day becomes a top loser the next day. For example, just 2 days back, TCS was one of the top gainer, and then the next day it started giving up all the gains. Previously, Tata Motors was one of the top gainers, and then it started giving up the gains. So during such scenario, when Nifty has been forming a wedge shape pattern, such a kind of a movement becomes very challenging. And so intraday trade or positional trade should be done with a strict stop loss, and money management becomes very important, because if there is a high possibility of whipsawing during such scenarios, and one can probably keep a far away stop loss, or else also use a method where we can see a close above the previous day high for confirmation. Now coming back to the Elliott wave structure, the wave which we have marked here is wave D. The entire uptrend from low to the high is probably wave A, and what we are seeing right now is wave B. Also, the reason why we are calling it as wave B, because we have not seen a faster retracement of this entire rise from 8005 or 8002 level to the near about 8600. So there is no faster retracement, which is in sync with our outlook that wave B is ongoing, and post wave B completion we should start seeing wave C on upside. Nevertheless, it is too soon to conclude that wave C should start right now, or there is more of wave B which can go down, because there is no price confirmation, and the bias can result into preempt taking positions without the confirmation. So during such scenario, one is to be extremely objective. It's a very tricky situation where stock specific movement is also challenging. So it's better to wait and watch whether market breaks the 8000 level, which is the psychological mark. As of now, it looks unlikely, because we are expecting a wedge shape pattern. Once it is complete, the rise can be sharp and fast, but there is no positive confirmation as of now. Close above the previous day high is the technique that one should follow, which will provide short-term indication. For more crucial levels and detailed counts on the Elliott wave along with the crucial levels on the short-term chart and 10-minute chart also. We have been showing 10-minute chart where the wedge shape pattern is much more clearer. You can always get access to our research report, the financial wave short-term update, which is published every day morning covering Nifty along with stocks. For any other details, you can always drop us a mail on helpdesk@wavestrategy.com and visit the website at www.wavestrategy.com. So that's it for now. It's a short video today because we are expecting volatility to probably come down further over next 2 to 3 days before again a trending move to start very soon. Look for the crucial levels mentioned in the report and look for the Bollinger Band shown here. The upper band is now near 8180, the lower band is near 8050. Look for this decisive break above or below these bands for a trending move to start in that direction. We'll catch you again next week on Friday. Stay tuned and thanks for joining in today for a short video.